So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling the free world. Here we go. This is 50 pips, 27th of Jan, 2019. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. So, what's happening? As we're going into a fairly interesting week, so we're going to have earnings, as we said. We've been waiting for this week for quite some time. So we start to get the big tech names reporting. So we're going to have Apple, Facebook, Amazon. We're also going to have Tesla, which is interesting for us because that's one of our core single stock name trades this year, right? And we're going to have more on Brexit for sure. We've got Draghi and Carney speaking. We've got the FOMC. And on top of it, since the the government's open again, we're going to start to have data. So we've got non-farm payrolls on Friday. So it should be a very, very interesting week ahead. It's not a lot has changed to what we've been discussing, but I just wanted to go through some key charts just to make sure that everything is clear going into this week, right? So the first key chart is, of course, the ES, right? And this is going to be basically our proxy for all the equities. And essentially what's happened is we've made it all the way back into this, just below this 2,700. And the big question is, are we going to hold the downside or not? Now, we said there are a lot of different ways of looking at this. You could be looking at the 50 back retracement from highs into those lows. And you see that essentially here we're kind of stuck inside that 50, 61.8 retracement zone. You can look at it in terms of just key levels, right? This 2,600, 2,700. You could look at it in terms of the fact that we're right back into the 50 DMA and 100 DMA area. But basically, essentially this is still considered a very, very healthy retracement. Now, if you actually look at it, funnily enough, this is moving pretty much in lockstep to the way we opened last year with a big ramp right into the open of the year, right? Behaving exactly the same way. And it's very hard to trade, especially in terms, as we've been discussing, in terms of sizing, right? Because we're getting all these headlines, all these BS headlines, whatever you want to call it, FOMC guys all on the wire at the same time, the Mnuchin and all these things. It's just very suspect times. We've talked about this, so I'm not going to labor it. I think here going into the week, the focus is at what point are we going to have some kind of retracement? Clearly here we've had, right, this is a major squeeze, and the healthy move would be to see some kind of retracement. Now, what's interesting also, as we go into the FOMC days, we've seen that recently, pretty much every time we've had these Powell days, the market ends up down. And with what came out on the wires about the Fed and stopping, the QT kind of discussion, or the trial balloon, the big question is, are we going to continue to just see that squeeze right into FOMC, and then that's where we start to come back down? That's a very interesting possible scenario. But the problem is just, again, the sizing is staying nimble, because when it squeezes like this, it's just very, very hard to call the top. So usually if you're going to get a very clear turn like we get here, it's just going to mean that if you're flat, you wait for the turn, and you're just going to have to pay up maybe a little bit of a wider stop, but you're going to have a much clearer entry, much more confirmation of the entry. If not, as we've been discussing the weeklies also, is you just gotta start to nibble to the short side and make sure you have some kind of a position in case this pukes. At least you've got something on, and you can always try and add to the position. Our base case is still that as long as we do not get a day close above the 2,700 or this 50 DMA, we're going to continue to hold some kind of short exposure. The moment we get a day where we close back above either of these two, then we'll be out of the shorts and re-looking for entry. at that point, because the squeeze into the 2800 could accelerate very aggressively. But for now, that, you know, our outlook hasn't changed. We're still, you know, looking at exactly the same thing. So we're going to have to be patient here. Now, the other thing which is very interesting, and probably the most interesting thing, is the ramp we're seeing on the dollar, right? And this is really no, the unwind we're seeing on the dollar move, and this is really no surprise to us because we've been stubbornly short, right? Let's call it stubbornly short. We've gone through this in a lot of detail. So the big question is now, are we going to get this final acceleration we've been looking at into this 94 zone that's going to accelerate back into the 92? Or is this a lot of shenanigans in here and we're going to try and attempt to break higher? Now, if you look at all the currency pairs, it does look like we're going to see more dollar weakness coming in. So no real change here to our outlook. We're still holding those trades and we're still looking for this to move lower. And what I would really, as we've been discussing, what I would really keep my eye out for, because that's also driving, you're seeing it's kind of coming just ahead of these squeezes in gold. And you know, we talked about the fact last year that we were not so interested in looking at gold versus USD JPY. We're always looking now at the way gold was moving with the USD CNH, right? So what's really driving this gold back at this pivotal level, right, where either we're going to continue to see hedging and selling coming in here to put a lid on this. If not, we'll likely see a very aggressive move to this 1350. And this is going to be an interesting zone. I'd be very cautious about trying to get aggressively long into this area. But clearly our base case hasn't changed, right? We've been looking for this 1200 hold to bring us a retest into those highs. We just didn't manage to get a really nice entry on the long. Again, I know some of you guys got long. I didn't get back long on that. I missed it this year to play for the seasonal play into January. But here, this is really something you have to keep an eye out for. But if you look at how this started and what's really been moving this in terms of the tell, as being the case last year when you're getting all those smackdowns, it's just USD CNH. So here, this is what you have to watch early in the week, right? Because as long as the bids are still supporting here, right, into this 200 now on the daily, then you could get a little bit of Momo chasers on gold could get a little bit of a surprise. But if this breaks and it goes knife through butter, then the move could be aggressive. So this is really the chart to keep an eye out for as a proxy for gold, as what's likely going to lead, right? Is this puke going to continue, or are we going to find some kind of a base? Is this going to try and stabilize here around this 200? That's really the chart you have to keep in mind. So especially if you're trading intraday, I would say it would be a real shame not to have the USD CNH chart up, because if you look at it on, you know, last week and for the better part of last year, you know, that's really been a key driver. Now, the other thing, as we're talking about the USD moves, right, what we've been looking at and what we've been discussing again is this USD JPY, and we still think we've got a retest of that of the 100 mark coming. And here clearly it's very tricky, because after you got that flash crash here, if you look at the chart, it's very tricky to get short into this. Now our base case is we're kind of ignoring this, right, and we're focusing on the shorter term action. The way we're looking at this again is that the 110, and we've been looking at this since last week, offered extremely interesting opportunities, extremely interesting asymmetric risk reward to play for a retest of this move lower for the unfinished business down here, right? Because as you saw essentially last week, going back into this level, we hovered the whole, you know, for much time we're hovering around these 109.70s, 109.80s, just right on top of this 110. So even though it tends to be lower odds here, right, you think, okay, they're really going to take that out, you might as well play for the flush. You know, sometimes you have to always have to understand that sometimes a lower odds trade with a very high payout, can be just as interesting or even more interesting than a higher odds trade with a lower odds payout, right? So let's just make sure I didn't get it the wrong way around. So a lower odds trade with a higher payout is just as good, if not better, than a high odds trade with a lower payout, right? So here, we're still stuck in this. We've been working this to the short side again, as we discussed a lot, and we'll just have to see. Either way, we really don't care whether it's a long or a short. But right now, this is the asymmetry here. Is if this holds, it's going to be a very, very good trade. And you see that the way this is starting to play out, or the way this is shaping out, is you've seen that, and we know that USD-CNH, the powers that be, love to ramp this up wherever they get an opportunity, especially in the low liquidity times and the funky times into the end of days, end of weeks, or whenever there's a good chance. And here, what was interesting to see last week is the way this traded, right? That every time it had a chance to get that ramp, they didn't manage to ramp it any higher. If anything, even when the dollar was getting bid across the board at different times of the week, this was staying very, very weak. So this is an interesting tell, right? So it's the same thing. We're still stuck in that zone, right? And we've had some very nice pukes off this area before. So I think even here, the asymmetry is quite interesting, right? If this area holds for a retest of this move lower, I think it's still far nicer on USD JPY, especially if you traded it last week, than right here. And into euro, that just means there's no real change here on euro. We're not going to change our tune. This has been a very, very sloppy trade, but our base case has been and remains that it has bottomed and that we're trying to reverse back higher. That's extremely sloppy in the way it's trying to move, right? But if this could be a fake out for the move high, extremely sloppy, right? But nothing much has changed here. And I think probably the other most interesting setup going into the week is on cable, because in the same way we've had this nice little squeeze back up as positioning was really one-sided. If you look at it here on the weekly, right, this is an interesting zone where we sold off very aggressively. And the question is, in the same way we got a little bit, market got a little bit too one-sided aggressive here and complacent, isn't the market getting a little bit too complacent here on no Brexit risk, deal risk? So I think this is a very interesting zone for for cable possible shorts this week. So I'd be watching this quite closely. But even more importantly, and this has been a favored way of ours to express this trade, is especially if we see that euro strength coming in, then I would be watching euro GPB a lot closer. I just think it's an interesting. We'll try and discuss this a little bit more this week, but I think this is an more interesting way to try and play this, especially with the euro component. So again, I'd be watching this very, very closely for a possible move right back into the scene of the crime on cable and on euro GPB. Okay, we'll try and discuss this a little bit more this week. So that's pretty much where we are. Massive week. We've discussed this for a long time, and we're really waiting for these tech earnings to come into play, because this could really be make or break, right? Because keep in mind now that we're going as we get through the FOMC meeting, no more blackout period for Fed speakers. And as we're getting through this earnings, right, these earnings, the tech earnings, we're into the end of earnings seasons, the blackout on the buyback is going to be out of the window. So we really feel that if the market is going to take a stab at accelerating lower, these next 2 weeks is when it has to do it. If not, it's going to have a hard time doing it. And again, if you look at the ES on the daily, right, you've got this 100 that has moved back below the 200, right, and it's really likely going. This is where it's going to be fought, right, holding that 2700, holding this cross of these two moving averages, right, holding this series of lower highs after it kind of flat kind of top action here. This is really where the fight is going to be fought. And because of the way this is lying in with all these earnings and the blackout period on the buybacks, it's likely that it needs to resolve. If it's going to resolve to the downside in a nice fashion rather than an ugly fashion, it probably needs to try and do so in the next 2 weeks. Okay, guys, hope everybody has an awesome one. Talk to you guys soon. Thanks for flying with 50. Take care. Bye bye, guys.